Hello and welcome to this Wednesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we're going to have Andrew Cox giving us a shipper update. But first we're going to go to Zach Strickland with Carrier Update brought to you by PowerFleet. Stay tuned.
Hello everyone and welcome to your Wednesday Carrier Update presented by PowerFleet. I'm Zach Strickland. So we're looking at our tender rejection rate continue to increase. Yet again today we see a 4-day rise here, 26.65%, a slight increase yesterday. This graph makes it look like a little bit more of a rise than it really is due to scaling purposes, but we've risen about almost 1% now, week over week, by the end of September. Did not expect tender rejection rates to really increase at this point, considering volumes are doing exactly what we expected them to do, and that's kind of moderate and come down to start the month of October off of an end of quarter, end of month, little bump rise that we typically see. So yeah, tender rejection rates continue to increase. Now, the reason for that is that we have seen an unprecedented rise in long-haul freight. That's freight that's moving over 800 miles a piece. So this here is the average outbound length of haul, average length of haul for the entire country for all the loads tendered. And you can see that has, we really kind of ridden a wave here as we come into March. Again, that panic buying, we had a lot of short haul freight leaving some of the DCs closer to the population centers. We had a lot of, inventories just getting reduced to rubble during this period of time, as a lot of that freight was hitting, coming out of a DC in Harrisburg, going to New York City area, etc. So shorter length of haul freight back here in March. But again, capacity super tight anyway because of the increasing demand. As we go into April, May, things moderated, of course. The overall volume levels were very low. We didn't really hit that 10,000 mark that we kind of benchmark at on the OTVI until about, probably mid-May or so. And then we see our average length of haul increased dramatically during this period of time as they're restocking these inventory levels, and now we saw a little bit of that short haul freight increase down in July, around July 4th, putting it back into the stores, etc., some of these fulfillment centers, and now we've still seen a lot of long haul freight growing year over year. So we're now up over 638 miles on average. Again, that makes it a lot harder for carriers to manage their networks when they're having to traverse long distances. These shorter length of hauls, not necessarily as hard to manage because you can get back in a day on a 250-mile run, but this 600-mile plus load average definitely indicative of how much carriers are having to drive each load, making it a lot harder to manage their networks. Now, where in the United States right now are we looking at a lot of the disruption? What is driving this tender rejection rate up? As you all know that you've been watching, weighted rejection index is a good way to see what's changing week over week in terms of capacity in some of the largest markets. And even if it's not a large market, is one having a very strong increase in a shorter tender rejection rate increasing in a smaller volume market. So looking at the country, we see those markets in blue. Back on the map in blue, Ontario, California, Los Angeles, California, both showing increases in the weighted rejection index there. Salt Lake City, Denver, out there in the mountains, both showing increases in tender rejection rates week over week, significant at that. We still have the Pacific Northwest really driving a lot of reefer volume right now, and it's creating a big capacity crunch up there. Again, it's kind of their produce season. Harrisburg, Pennsylvania, out there in the Northeast, we keep doing this seesaw back and forth as carriers are moving back and forth between the coasts. Ontario leading the way, 13.9. Stockton, the smallest weighted rejection index number right now, but there are some larger markets down there, reducing their tender rejection rates. Atlanta, Dallas, for instance, also showing lower rejections this week versus last week. So outbound tender rejection index in Ontario, we see it's popping up. Volumes are staying relatively stable at the moment. So again, it's just a capacity issue. Supply side is just not able to keep up with this high level of demand. Volume's still very, very high. Looking at Dallas, Texas, as I mentioned, as one of the smaller weighted rejection numbers. Volumes coming down, rejection rates coming down to around 20%, well below the market average. So anybody going into Dallas today may have a little bit more trouble this week versus last, and that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello and welcome to your shipper update. I'm here with Andrew Cox. Andrew, what's the latest?
Well, Anthony, I've got some good news on the consumer side of things. So these are the two major household consumer surveys. There are, of course, the University of Michigan Consumer Sentiment Index and the Conference Board's Consumer Confidence Index. So the good news here is that both of them have jumped up in September to pandemic highs, so the highest level that we've had since this pandemic hit back in March, which is great news. It's actually the first time since the survey has began, or it's the first time since COVID hit, that we've had a reestablishment of a higher proportion of people that are expecting good times financially to be reestablished here in the next 6 months. So we'll get into some of those components here in a moment, but overall, consumer confidence has picked up, and mostly in relation to the amount of COVID cases. We see an inverse relationship here. The two lowest months of the data are April and July, where we had those two spikes in COVID cases.
And you mentioned COVID cases have that inverse relationship. Another thing I saw was the unemployment rate also having that somewhat significant relationship with some of the COVID cases as more jobs kind of came back online and cases reduced. I saw additional increasing in confidence.
Yeah, it definitely helps. We can jump into some of these components and then we'll get back. So the overall, this is the University of Michigan Consumer Sentiment. The overall index, it's the largest 1 month jump in 17 years, which is huge. But the biggest one for me is the expectations. This had fallen significantly during the midsummer when we saw that really big peak in July. The expectations for the next 6 months had really fallen down, but that's picked up a little bit, which gives me confidence. It's very welcome news moving into the holiday season, and really welcome news overall moving into 2021, that people are more confident about their overall position and the position of the overall economy.
So you mentioned something moving into the holiday season. I think there's a lot of expectations for consumers to be buying. So do you think that all this additional consumer confidence and sentiment is going to have any impact on spending trends?
I do, but it comes with a caveat. It really all depends on those COVID cases. If we continue to keep this under wraps, which sadly we're seeing increasing cases in October, or the trend is increasing after a decline in September, that is really the number one thing that I can see here that is controlling consumer confidence. That being said, there is kind of a bifurcation here where the lower income families, the people that work in services, are being more highly affected than the higher income families. So I think they're, as much as the lower income families may not be able to provide as much, the higher income families may make up for some of that spending. We've seen that in the consumer spending data, which is what I wanted to hop into next. I tweeted this out on Twitter and put it on social media, I think over the weekend, and basically I said, why do you think I think the freight industry is going to end with a bang? This is good for shippers and carriers. Everything on the right side of this board here, everything in blue, everything that has positive year-over-year growth, all moves on a truck and all comes from our shippers. So this is a really good thing. Consumer spending is up. Again, it's the thing we've been talking about for months, that the lack of services available to people, they've replaced it with good spending. And I mean, some of these are up massively, 60 to 70% for home improvement and online electronics.
And we're looking at online electronics and e-commerce overall. There's still that big bump coming up with e-commerce holidays, talking about Amazon Prime,
right.
Best Buy, I'm sure, is going to jump in there, Walmart, Target. So all these retailers still haven't hit their online e-commerce holidays that should be coming up this month.
Yeah, and I mean, the thing with Amazon Prime now, right, they moved the Prime Day to October 13th and 14th, and some analysts are expecting them to really just try to reset where the holiday season begins and create a 75-day peak from mid-October all the way through the Christmas holiday, which, knowing the way that Amazon can affect consumer behavior and consumer expectations, how they have with 2-day shipping and same-day shipping, and how they change the way that we believe as a consumer, this happens to think that even if they move Prime Day back to July, like they do typically for 2021, that they may just reset that holiday season with or without Prime Day next year. So I think retailers need to start gearing up for an earlier peak season and a longer peak season, and this may be something that sticks beyond 2020.
So with, say, we keep COVID cases pretty much tame somewhat to some degree, consumer confidence remains stable, do you think this will be enough to maintain those historic freight volumes that we've seen on the consumer side?
I do. I mean, just the fact that services are still unavailable to people, even those higher income families, they may not be able to go on that holiday vacation, so they may pick up some more spending electronically. I just think that consumer spending is picking up right now, and I think we'll have a really good holiday season.
Thanks so much. Where can people find more?
Of course, always FreightWaves.com/passport for all the latest. JP's team and my team with Kevin Hill and Seth Holm. Daily stuff all the time.
Thanks so much. We appreciate it. And thank you so much for tuning in. That's going to do it for this Wednesday edition of FreightWaves Now. But as always, you can check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.